Hey, Deal. This is my thoughts on the chart you put up for the S&P, and as you know, in my prior days too, I would focus on these levels right here of this possible resistance coming up, and I would be leery into trading. But then over times, then I know I will find myself missing trades because I saw those levels there and prices pulled back, went right through it, or sometimes consolidate here and absorb this, whatever supply was here. But instead of that, now I just pretty much eliminate it and I just focus on which way that momentum is going at the current moment, and I use risk management accordingly. So I really just focus on reading price and what price is telling me, because it's not necessarily the area all the time on why prices either react at this area or just go through it. It's a lot of times how prices evolve. And so I've been trying to just focus on exactly what are these meanings and these signals that price is giving, when it's being tired, needs to pull back, need more sellers in, needs more buyers. And so at this point, my just basic analysis is this. So not taking this into consideration. This is what I'm looking at this point. Here, once I got in here, unfortunately for me, as we know that I classify my bars as static and dynamic. The olive bars are static bars, which means it's prices going nowhere, is less interest, or it's more focal interest just in this area. And dynamic bars is when interest is being shown into the market and is actually moving, so interest is brought into the market. Because we see here interest was in the market, but as we had these series of dynamic bars up, we didn't have any real interest in selling. So for me, this is kind of what I look at new money coming in, just new buyers coming in, more money, more money. I need some old money to come in, so I need some interest in selling to come in. So at this point, whether it goes up through here or not, forget the area. Just by this telling me this, I would have missed this. So by the time we got to here, this area around here, it'd have been too late for me. So I would have missed all of this move. So it's not an issue to miss a move. It's just called trading what we know. So me, I trade what I know and what I like to see as far as buying coming in. So I don't want to be part of this new money coming in. Just more people coming up. So I need to see selling. So here, just like in here, we had some interest in selling coming in, some interest in selling, interest in selling. So that means at least I have some people trapped. So this interest, these people that were selling, at least they got trapped. So now I can get action to go higher. Here, we had something coming in, but they were quickly reversed. Here, I have no down interest. I have up interest, static, up interest, static, up interest, static. And so it's just not nothing that I would have liked. Now, can it go through? We don't know, but I'm not focused on this point. I'm gonna wait till price action tells me. This means my momentum is up. So what would I like to see? I would like to see some down interest come in. And once some down interest come in, I'm still not gonna buy that pullback yet. So if a pullback comes with down interest, for me, I'm not gonna buy it yet. What I'm gonna do once some down interest comes in, I'm gonna let it at least make some attempt up. What I mean by that is at least go up and form a pivot, because as we know, these pivots are turning points. So I like to see some down interest. Then I like to see it go up and form a turning point. And once it forms that turning point, and then I like to see prices try to come down, because at this turning point, if it has anything, it should bring it down. We had a turning point, they couldn't do anything, and it formed another turning point and went back up. So once I get some down interest, then it tries to go back up and form a turning point, because the down interest, I want to see them fail. So when they form their turning point and go back down, and then based on that, I can consider going long, of course. But take note that my bar is not, my momentum is not violated. If this creates a new SMTM high, then of course my momentum line will be moved to here. What would I need for this particular instance? For simplifying purposes, I just need another dynamic bar. I have one dynamic bar that closed above here, and once I get one more dynamic bar that closed above it, that is one of the most basic ways that I classify, my SMTM higher high. So then my momentum line would be moved. A lot of times people, will wait whether it comes back to major support, and say, oh, this is major support, or they count this as minor support, and we're focusing on if it pulls back to minor support. Or we'll just say here, we'll just use this for example. It pulls back to minor support, they'll be looking at a buying area. For me, not worried about that no more. Usually when it comes back, I'll say, okay, we have to worry about an area. How far from minor support did it have to come, or how much below? My thing is this now. What happens is, even though this could be, which I'm not using, but I still know the terminology, a major support area, what happens is not if it comes back to major support, how deep does it violate this prior area? So whether you want to call it minor support, but this is my momentum line. So I want to see how far deep does it comes back. Because if it comes back to right here, and if I get two dynamic bars below my momentum line, then I'm shorting this pullback. Even though major support is here, I don't care about this. I'm going to short this this pullback. So when it pulls back, I'm looking to go short because of the level of penetration. Some people might use Fibonacci to do those, but what I found out is just basically, that's not even, well, for me, it's not necessary. I found a more simplified version of it by just using me a momentum line and know exactly what price is going on in the knowing. I mean, for here and now. So, and the reason why I'm not even focused on a higher time frame at this point is due to my risk management, the way I'm going to manage it. So basically, bottom line is, after interest comes into the market, I should be ready to take off. So if I get into a long trade, if this pulls back and I'm in it, so I sit through some static bars while I'm in it, I enter on static bars, and then once the interest comes into the market, I can manage it from a smaller time frame. So what's before the higher time frame changes is going to happen in this time frame first. So it's no point for me to look at the higher time frame. I've just trained my eyes to focus on the current time frame. So that's not saying you can't get better information from one, but from my point of view and the way I'm trading, like I said, I did S&TM, streamlined it, and so this is how I simplified it. So the bottom line is, we never know what's going to happen. So I'm not even focused on here. Let me see what price is doing. And so based on that reaction, that's how I look at it. We just take it from moment by moment. Because I'm not going to anticipate or see what might happen. I'm just going to wait and react based on the information the price is giving me. I'm going to have a risk management plan in. So if I'm wrong, I get out with minimum loss. And then I'm right, I learn how to, just exploit it. And as long as I know we've been trading, we could both look at this and see that pullbacks from this area is just higher odds of not, following through, because it's just, to move up. But just taking these red and green bars out and just looking at red and green bars specifically, this just gives me more ability to see, okay, what's really going on. These red bars in here, if it's red bars in here, they don't mean anything to me because they didn't do anything. It's just static. So they didn't produce any real results. So this dynamic bars is what shows me the money. It produces results, shows me interest. When I'm in a trade, I want to see a dynamic bar. I want to see it show me the money. So I think that pretty much went over my analysis. So we'll just watch the market and see what happened, and continue to focus on price. Price, what I believe is the true determination. Once we look deeper and deeper into reading price, it just reveals us more secrets of what these other traders are doing, what the bigger money's thinking, what their characteristics, their personality is, and how they're feeling at the moment, and their perception of the market. So that's what I focus on, and just share my thoughts. There with trading, it's really about if you're comfortable and you're consistent, that's the way to go. So this is just my style and my thoughts. All right, traders, talk to you later.